Elon Musk could pocket a payday so huge it would make entire countries blush, and the Pope just called it a sign we've lost our moral compass. They're calling it a $1 trillion package. Tesla's board tied it to wild, almost sci-fi goals, push Tesla's market value to $8.5 trillion, sell roughly 12 million cars in the next 10 years, and put 1 million robotaxis on the road. Hit those milestones, and Musk walks into a payday bigger than most nations' GDPs. Miss them, and he gets zilch. Enter Pope Leo XIV. Yes, the guy who's literally supposed to shepherd souls, telling a mainstream outlet that this isn't just finance news. It's a moral alarm bell. He said CEO pay used to sit around 4 to 6 times worker pay. Now, he quoted a figure around 600 times. He called the spectacle of the first trillionaire a symptom. If money is the only thing that has value, then society is in trouble. Let that sink in for a second. A spiritual leader who rarely wades directly into corporate compensation just called out one of the world's most visible companies and its richest visible figure. That's not small. It's a cultural mic drop. So what's the board saying? Tesla's chair, Robin Denholm, basically shrugged and leaned into ambition. This plan is supposed to keep Musk laser-focused on Tesla's future. In her words, if he doesn't hit the goals, he gets nothing. That's the carrot and stick version of executive pay. Enormous upside only if you deliver monumental results. Here's the first cliffhanger, and pay attention. How do we even measure deliver? Boosting market cap to 8.5 trillion depends on markets, hype, macro cycles, interest rates, the global economy, and, surprise, public sentiment. Selling 12 million cars? That's not just engineering. That's global supply chains, raw materials, labor, politics. 1 million robotaxis? That's regulatory battles, software safety standards, and large-scale public trust. It's ambitious. It's also an invitation to game the system. And there's the second cliffhanger. What if those benchmarks are met because of accounting, stock buybacks, or one-off asset plays, rather than sustainable progress for workers or consumers? Then you've rewarded a headline, not long-term value. The Pope smells that, even if he frames it in moral terms. Story time. Imagine a factory line where a single worker's daily grind keeps production humming. And across the spreadsheet, the CEO's comp explodes to trillions if shareholders vote yes. For decades, the balance between executive reward and worker pay held some social logic. When that balance imploded, you didn't just get richer CEOs. You got political friction, social anger, and a legitimacy crisis for institutions. Pope Leo tied those threads together. Concentrated wealth fosters polarization, and polarization eats institutions alive. Surprise moment. Pope Leo XIV is the first U.S.-born pope with Peruvian citizenship, and he isn't pulling punches. He's been pushing for fairer resource distribution. He's made the point at summits with world leaders. This isn't one sermon in a cathedral. It's part of a broader stance. Okay, so what does this mean for us? Audience-level translation. First, the optics are terrible for Tesla. Whether you're bullish on EVs or think Musk is a modern-day Edison, the optics of a trillion-dollar plan, while global inequality is front-page news, is a PR disaster. Second, the vote is in shareholders' hands in November. That's real power. But remember, retail investors don't always pack the room. Institutional investors and proxy firms carry weight. The Pope's words might sway public sentiment, but will they move the proxies? That's the big question. Another surprise, this isn't just about Musk, it's about structure. When compensation is jaw-dropping and tied to market cap, you invite short-termism, volatility, and distraction. Yes, big incentives can drive big outcomes, but they also rewire company priorities toward metrics that pump stock prices instead of building durable products or improving worker welfare. What if the package fails? Musk gets nothing. Tesla avoids handing over $1 trillion. But the damage, the trust deficit, the headlines, the cultural conversation sticks. Or what if the package wins and the goals are met? We then live in a world where one person's net worth dwarfs the budgets of entire public services. Do we want to normalize that? The Pope says no. Plenty of others say yes, saying performance-based pay is what scales innovation. Here's the no-nonsense verdict you didn't ask for but need. Incentives matter, but incentives that produce outsized reward with outsized social harm deserve scrutiny. It's not anti-capitalist to ask whether compensation structures reinforce inequality and political instability. It's realism. If you want actionables, if you own Tesla stock, read the proxy and look at who's voting. If you're a policy person, this is a perfect moment to push for transparency in compensation and for aligning executive pay with long-term worker and environmental outcomes, not just market cap. If you're a voter, ask your representatives about taxes on extreme wealth or closing loopholes that let the mega-rich dodge broader contributions to public goods. Final cliffhanger before the close. Imagine a world where leaders, corporate and spiritual, agree on a simple premise. Extreme wealth without commensurate social benefit is a systemic risk. That's either a utopian speech or our near-future policy battleground. Either way, it's going to get loud. Last bit, the promise. Keep watching these stories. They'll look like finance at first, but they always spill into politics, culture, and everyday life. This isn't just rich people math. It shapes hospitals, schools, and whether your local infrastructure gets fixed. One sentence closer. Don't let headlines about trillion-dollar pay packages make you numb. The stakes are real.